All right, 2 days in a row. The news of the morning, obviously, is Oracle came out with earnings. They weren't altogether horrible. They actually beat. So I would assume they guided down. It closed last night at 126. It's currently bid at 113. So pretty significant shellacking for them. But if you look at Oracle on a chart, it has performed really, really well. Here it is on let's get it to a 1 hour. And you can see they really smashed it for earnings. But here's a 1 hour. And this year, it has just been it's been a great trade. So if you have gone long from Oracle down in the 70 area, high 70s or so, it's up. What year to date? What's the year to date? It's got to be, they put that here, don't they? Somewhere here on TradingView. I thought they did that. I thought they did that. I thought they did that on TradingView year to date. What's that all about? Or is that an indicator? Anyway, needless to say, you could figure it out. So it's been a massive move, and it's really nothing more than it's kind of coming back in where possibly it's going to grab some momentum again to the upside. We'll see. The market is looking really soft right now. I wouldn't really buy it in here. My wheelhouse would probably be about 107, right in this area here. Right in this area here, because it's below that gap. It had a huge gap up around 105 up into the area it's been trading in right now. And that to me looks like the most reasonable place. There's a high volume node there. Does look like there is some buyers down there. There's also some sellers underneath. But again, if you were going to look to do anything, that's where to do it here. I did not do an earnings trade on Oracle last night. And the reason is I already own stock. The only thing I could have really done was sell some calls. That probably would have been a great idea. Just never, didn't do anything. You're definitely going to get a volatility collapse today. I think IV was actually pretty high. IV rank was at 60. That's really high right now. So I don't really know if there's going to be an after market trade. What I might look to do today in Oracle, and anytime I see something kind of collapse like this, I will look for an options trade. And if I look for an option trade, I'm more than likely going to, at this point, since it's down, I'm probably going to look at some puts, selling some puts. And the puts that I would probably sell here, since it's down about 113, would be something either a 115 or a 120. And why? Because these deltas on these puts today the delta on these 115s and the 120s are really going to explode. They all have good open interest. Anything in the 120 area, you can see the open interest here. So they're very liquid. Get my screen brush. Very liquid underlyings that I'd be trading. Downside to them, obviously, is I only have 3 days. So, I'm going to really need to be able to do something and maneuver in and out of them quickly. That's another reason why I would stick to right here. So I would stick between these expiries. I wouldn't go higher than 120. And I would go down as far as 115. You're definitely going to want something in the money here to do a day trade like this on options. And then what you're looking, and again, if you look here with the open interest, you're looking at some really, really liquid underlying options here. Like the 120s have 7,000, the 119s have 11,000. The 115s obviously are the best at 13K here, open interest. So that is pretty significant. That is pretty significant. And the deltas on these are going to go in the 70s because they're out of the money. So they're going to be in the money, and that's what you want because that's going to, and if Oracle bounces today, and it's not going to need a heck of a lot of a bounce, and you need to do this within the first half hour because your objective with this type of trade, again, you're going to be selling puts, so it's going to be like synthetically getting long the stock or buying the stock. The objective with a trade like this is that you are going to get this volatility collapse in the option premiums, and also if it bounces and goes up, you're going to get a kind of twofold effect there. So I'm expecting these to be about, they're probably going to be about $2. I would say $2 or $3, the 15s, the 20s, maybe about 4 or 5. We'll see. This is a pretty big move here. It is bouncing a little bit off the lows. So that's going to be the trade that I'm going to be looking, and I call it it's kind of a retail fade. You're going to have all retail basically come in because all retail ever does is buy calls, right? Let's face it. That's what 90% of every jackass out on the planet does is they go out and buy calls. And, so you're trying to fade that. They're all going to run to the gates because they're all going to get hammered, right? They all bought these calls. They're all going to be basically worthless, totally worthless with the volatility collapse and the fact that it's down 13 points. They're going to get massacred today. You are going to have a few of the people who say they bought puts, but you're going to get the same sort of thing on the puts. You're initially probably going to get, unless they get out of them in the first 15 minutes of an opening, you're going to get the same thing in the puts. Excuse me. You're going to get the same thing on the put side as you are on the call side. You're going to get a volatility collapse. Like this IV rank is probably going to go down to like 20. And that will suck all the premium out of here. But in our case, we're going to be looking to do that in the first half hour. So we're going to look to capitalize on some of these folks out there and looking for people running for the gates. And then we're looking for a little bit of a bounce. And so it's just going to be a pure day trade. So I'm either going to sell the 120s, long story short, long story even longer. I'm going to be looking to sell the 120s. Right on this side. Oops, wrong thing. The 120s. I need the arrow. There it is. I'm going to do the 120s, and I'm going to stick to September. Again, they only have 3 days. I'm going to do the 120s or the 115s. That's where I'm going to land. Now, if you want to, kind of buy yourself a bit more time with this, my suggestion would be to go out to October. You have about 38 days if you're looking for more of a swing trade here. Go out to October and sell the 110, selling out of the money option. And the reason you're selling the out of the money option is, again, you're trying to give yourself some time. You're trying to give yourself a little bit of time. And in this case, I would sell the 110 if you want yourself, if you're not looking for a day trade, if you're looking for more of a swing trade, and you're probably saying, dude, why would you do the 110 and go out of the money as opposed to doing the 115, right? Because the reason I'm going out of the money on the shorter time frame is I'm synthetically trying to just trade the stock, right? And I'm trying to day trade that shorter time frame because it'll be cheaper, and I'm just looking for that quick hit and to get out. Now, if you're looking for a swing trade, you're better off going out of the money because you give yourself a little bit more breath of being right. So you're giving yourself another, This thing, if you could sell a 110 out in October, would probably be about $2 maybe today, maybe $3. So that puts your cost basis down about 107. So you basically almost have a 10, you have close to a $10, $8, $9 cushion there for break even. So that's why I would go out of the money in October if you're looking for a swing trade. So that's how I kind of play Oracle today. I know that was a long-winded, but there's a couple of trades right out of the bat. No, I didn't even leave you a notice. I didn't even really look at the charts a little bit. I did say, hey, look, and that 107. Like, let's talk about just the charts. I said 107 is a good area of support. Well, selling that 110 October Oracle put puts you right around 107. So, again, always try to marry what's going on in the charts to a trade. I just think there's a lot, look, I've been off how long now? Probably about 6 months, maybe 7 months, maybe even longer. I don't even know. But, and I watch people's videos too. And one thing I just never see anybody do, I either see people day trading futures or them showing what appears to be some day trading thing. Every time I usually go on these people's broadcasts, I never see them take a trade. I never see them take a trade. I see them trading all the time on their advertisements, but I never see them take a trade. And I'll sit on there for an hour, sometimes 2 hours, and I'm like, is this guy going to trade or is he going to just look at the goddamn charts? And that's all they do is they just and then even some of these clowns on TikTok, they'll sit there for 2 hours showing you charts and going, and nobody's trading. I'm like, what do you do? What do you do, dude? Are you trading or what? So anyway, that's what's gotten me frustrated. That's why I'm back, folks. So here it is, 2 trades. So either the October 110s, if you're looking for a swing trade, and then the Septembers, they only have 3 days, got to warn you, that they only have 3 days, and then we're either going to go 120 or 115s, and those are going to be a day trade. We're going to be looking for a pop, and if it doesn't pop, guess what? It doesn't work, right? I'm going to use a stop and all the other business, and if it gets stopped out and it's a loser, it's a loser. So that's the story on Oracle, and so that's really the only stock to me that looks interesting today. There's a number of stocks that are kind of gapping up. We'll put Apple up there. I hate talking about Apple because, Apple to me is it used to be a great trading vehicle, and I'm not saying it's not good. It's just, it's become to me, it's like IBM now. I mean, it just doesn't really trade the way it used to. It used to be a behemoth. It used to be a great trading vehicle. I'm just not finding it to be a great trading vehicle anymore. It's a great investment. Look, it's put a lot of cake in my bakery, but they have some product launch today. I think the iPhone 5 comes out, or 15, whatever iPhone they're on. Who knows? It's like, come out in the black. Cook will come out all dressed in black and be like, we moved the button an eighth of an inch, or we moved the plug-in, or we got rid of something that everybody wanted, but we got rid of it anyway to be different. So that's basically what's happening today. And so that's why it's actually bounced, I think, a bit this morning. I think Apple's a bit untradeable here, not only from a chart perspective. It looks overall weak, just like most of the tech stocks here. But if you're actually looking at it from a volatility point of view, there's no volatility in here at all. So the IV rank sucks. So the only thing you can really do here in Apple is you could play it directionally. And I don't know if you really want to do that. It's a very liquid stock. Right, you look up and down as far as the open interest, right? Apple is probably one of the most, if not probably the most liquid stock that there is. But you don't really have many choices, and you pretty much need to stick to doing spreads outright. Puts or calls, calendar spreads probably aren't a bad play here, but again, kind of untradeable to me. So I'm not really going to touch it. And so that's where we kind of sit, excuse me, with Apple. And I really haven't touched it. So let me look real quick at let's look at some futures. Real quick, just full disclosure, I got freaking cut to pieces yesterday. I don't know anybody else who traded futures, so I really haven't talked to anybody. There's not really anybody in my circles that trade futures on a regular basis, but I got freaking cut up. I got sliced and diced like a pig yesterday. Oh my God, it was bad. It was bad. I didn't lose a ton of money. I think I all in all, at the end of the day, I think I was down like 300. But I got sliced apart. I mean, it was horrible. The price action was horrible yesterday. And I hit my loss limit. I have a $250-ish loss limit. I hit $250 when I'm trading futures, and I turn off. I log off my brokerage account. When I did, I hit it. Excuse me. I hit it and I shut it the F down. Right? I obviously got up in disgust and everything's rigged and everything sucks, right? Of course, you ranted a little bit and like, rah! But, that's trading. If you don't do that when you lose, if you don't have a vested interest in it, what fun is it, right? What fun is it just sitting there like a zombie and being like, "Ugh." So anyway, I kicked and screamed, but it was a chop house yesterday. Absolute chop house. Wasn't really much clean, definitive movement. From my point of view, anyway, it was very, very choppy. And, for my style, which my style is I use a pretty tight stop. And using pretty tight stops yesterday was not really the thing to do. Now, you could have made bank yesterday if you were using really wide stops, like maybe 15 or 20 points. And that's fine if that's your trading style. You probably did okay. But for me, and my trading style, did not work. So I got cut up bad. I got cut up in the ES and I got cut up in the Russell. So with that being said, yesterday's levels are all still intact. You can see I still have this marked from yesterday, this 45. I talked about 45, 45, 45, 45, 45, 45 yesterday, which was R3, is now an R2, R1. Amazing how this works, isn't it? Now, I didn't even make this up. You can't make this up. It's literally an R1. It's just above an R1, so it's perfect. It's still a perfect setup, in my opinion. And the other level we marked yesterday, which was nothing nothing more than a high volume note, is now an R2. See R2 up there? Which is 45.51. And amazing. I don't make this stuff up. I don't insert this stuff. I just try and follow the methodology here. And the methodology, folks, is really simple. You have volume profile here. You look for high volume nodes, which again are these points that stick out, right? If I were actually to just zoom in here and I'll just pull this down. If you zoom in here, you can see there's these points that stick out. And obviously, I want the highest points of where all the buyers are kind of like at their peak. And you might say, well, wouldn't you want to buy there? No, because that is where they've kind of peaked out. Because if you notice at these 2 points up here, there's all this red up here. So this actually shows these are spots where the buyers got exhausted and they gave up. And the sellers won because you can see above it, the delta's red. All right, so that's what you're looking for. And you're looking for those high volume nodes. And you're also looking for these, what I call them, everyone calls them low volume. Some people call them low volumes. I like calling them volume holes. And because they're holes in the profile that show that there really was no, there was really no interest there, whether it were buyers or sellers. I mean, here it shows that the interested folks were buyers. The interested folks here were sellers. But there's really no conviction. It's just an area where, again, it can be an area of reversal where it's just a point where the algos read and say, hey, look, it's an area where we should either go flat or go the other way. And that's kind of what happens. And so that's really it. That's the methodology. And then to play these pivot points every day. So we're either buying support or we're selling resistance. And where these high volume nodes coincide with these pivot points, they're great areas to trade, or at least they've always been great areas to trade. Again, it's not 100%, it's more than 50% of the time, which to me is more. I'm more than happy with those odds. And so I'm not going to really talk much more about the ES. Those levels are still intact. I actually like R3 today. I think R3 today is a really, really great trade, and I'm actually going to, mark this one up. And this is R3. And today is the 12th. And it's important when you mark these that you put the date. Because as I said, now look, the reason I do that is because I want to know when it was actually a R3. Because when I look back from yesterday, right, I knew what is R1 today was R3 yesterday. So there is a significance to that. All right, so R3 is a really powerful trade today. Again, you could see that it's all red here, but we kind of gets down into one of these volume holes where even though the conviction is overall selling, they kind of get exhausted there. So it should be a good area for a reversal. It's below the big round number. It's below 45 honey. So it's 44.95. So to me, that's a pretty good spot, especially if we get any momentum sell-off today and we get some really big movement to the downside. That's a good setup, in my opinion. So we got two on the ES, R1 and S3. All right, and just so you know, here's the pivots. A lot of people ask, so what are you talking about? Here's the pivots. It's just called pivots on TradingView. It's free. I always use Fibonacci. The Fibonacci pivots don't give you R and S, 4 and 5. They just don't. I don't know why. That's just the way it is. I could probably go into Pine Editor and edit it. I have the calculations. I just don't really care. Usually when stuff gets to R4 and R5, it's usually that big of a move that are you really going to step in and buy or sell at that point? Up at those resistance and support levels, it's probably best to stay the hell out of the trade in general because usually there's a lot of momentum in one way or the other. You end up getting your face ripped off, at least in my experience. And that's it. That's all it is. That's all it is. It's Fibonacci. It's the daily, and you look back one period. You want to go back 2 periods, that's fine. The more periods you put on here, this sounds gross. More periods, you need more maxi pads. The more periods you put on here, the sloppier the chart gets. So you can see if I notice, notice it starts getting real messy in here. And you could do that if you want to, temporarily to just look back to see if things coincide. I personally don't care. One's enough for me because we keep track, but you could do whatever you want. That's it. So that's how you get the pivots. That's all there is to it. Okay, and so that's the ES. We'll pop over into the Russell. Russell's been a rough trade. It really has. Yesterday, took 2 trades in the Russell and was literally out of them in 20 seconds. I think there's really not been a lot of volume in there. And B, it seems to be there seems to be a lack of conviction one way or the other. It doesn't matter. Took one short trade, took one long trade, and both were literally just, it's just like a drift. Again, nobody's home. Nobody's home. And so I don't really see, and I was looking here last night, I didn't really see much on the Russell. Other than that, still, if we actually zoom in far enough at this point, I think if it does that, we still have this head and shoulders pattern on the 1 hour. This is a 1 hour chart. We still have this pretty distinct head and shoulders pattern, and we still have this 1834 marked, which I think is a good spot. It's below the S3. There is a high volume there node there. As you can see, there is one here. And that's still marked from yesterday. And we have this pretty distinct, this is textbook, almost textbook head and shoulders pattern. If you're a pattern trader or you use them to guide you, again, I don't live or die by these. I've always said that to people. But I like to be aware of when they're there because I know there's people who trade that. And again, those are people who are, the way I look at it, those are consumers of what I want to do, right? And usually what I want to do is the opposite of what they do. And so it's good to be aware that that stuff exists because there are wonkos out there who trade this crap. And whether it works for them or not, I don't know. Maybe it does. That's good for them. But, I just know for me, I know it's usually counter. So again, this is down at the bottom of the neckline. And those are usually areas of pretty good support, at least for a bounce. Again, I'm not going to bequeath this trade to my kids, but this should be an area of where we get, I would call, probably that natural technical bounce. And if I could steal some ticks out of it, fine. And we have a decent amount of, I'm not going to say it's enormous, we have a decent amount of buyers down here. And it is a low volume node, so it's a low volume hold down here. So you should expect a reversal. Anyway, so that's it on the Russell. I don't see anything on the upside for the most part. If there was a spot that I would look most for getting long, getting short, I don't really see it. I don't see it. Possibly R2. I have them all marked already. We haven't hit them yesterday. And I'm probably going to move. I'm going to keep this. This is at a high volume node. I might actually move this up. You see the teat of that node. The teat. See the teat right there? So we're going to move this up there to the teat of the move. Maybe R2. I have it marked. I will take a look at it. 1871. That's a pretty big move for the Russell today. I'm not sure there's enough catalyst out there for us to get up there. I think there's obviously more catalyst to the downside. That's it as far as the Russell. Let's talk about crude. Crude, I should have traded crude yesterday because crude yesterday set up phenomenally off the swing high and literally sold off on the R3 yesterday. Like it was clockwork. It literally touched it and reversed and went the other way. It was the most awesome trade that I never took in my life. Kicking myself the entire day, but what are you going to do here with crude? Now, the problem with crude is you really have to kind of zoom out to get any kind of real indication of where this thing is, because we have not been up at these price levels since back in 2022. And I still have all the stuff marked. I'm still watching this 91.78, which maybe we get there today, maybe we don't. But that to me is kind of the spot that I like the most. And right now, we're kind of, I'm just going to focus in on this and move this out a little bit. You can see here, we're kind of in a bit of a chop house. And we do have some sellers that could possibly come in around R3, 88.79. 88.79. So I am going to mark 88.79 with a disclaimer. The problem with this spot, again, for me, is that it's not really a high, I don't see it as a high conviction spot. I see it being more of a kind of a fade, another sustained round. Because again, we're up another $1.08, $1.09. We're about 40 points away, 40, 50 points away from there. I don't think it's going to take a lot of momentum to kind of crack through that. And so that's why the disclaimer is that we really need to watch, and I would actually probably disclose here and just say fade on low momentum. And the reason I say that is a fade on low momentum is because if the momentum getting up there that carries us up to this level is slow, and we can actually move back to the 1 hour chart because the profile is really not an issue there, and just get it. If the momentum actually carries us pretty methodically up there and it's somewhat low and we don't really see a lot of power getting up there, then it's a good fade. If we see a lot of momentum come in going up to that level, stay away, because chances are what's going to happen is that's going to be that's going to be a buy stop run. They're going to go up there, they're going to eat up all the buy stops, and they are just it's going to keep, and it might even just blow up to that $91 level, and you're going to get stopped out quick. So, with that being said, so that's kind of my trade in crude, and I don't really see anywhere where I'm going to be willing to get long at this point with crude, because it is what it is. It's just been a powerhouse, and I think it's going to continue to be a powerhouse until it gets to $100. I mean, you can see here, it is literally just, look where it was back at the end of August. We were down in the 70s, and it's up near 90 already. So it's been a straight line. I mean, you want to get you want to see the most useless thing you can possibly do. With trading indicators and everything else, is try and put trend lines and shit on crude oil and think that they're going to hold. You're out of your mind, especially with stuff like crude. I mean, all this shit looks nice, and wow, look, we're in the channel. Yeah. I mean, how many times I've seen it blow through a channel like this? I can't even tell you. The gravestones are marked in the trading world pretty heavily with the fact that, I was riding a channel in crude and it broke down. Yeah, no shit. Because again, it's an emotional asset, more so than probably any other. And so there's my trades actually in some futures today. What's going on? And I think I kept it under 32 minutes. So perfect. And that's it. That's all I really got today. Nothing in soybeans. Still chopping and slopping here. And that's it. So anyway, hope that helps. Couple of trades on Oracle. We're going to look for the day trade. Right. We're going to look for the day trade in Oracle if it sets up. Right. Go October if you're looking to swing. You want to be a swing trader on it. Go out to October, do the 110s. I'm going to do the September, either 115 or 120. Going to sell the puts. We looked at the ES. We looked at the Russell. We looked at some crude. And I think that's ready to go. So have a good one. And I noticed there was some people who are back, so I appreciate it. And I'm going to try and do this every morning for about 30 minutes.